Hello. Well, this is the second try at this. I guess I never made a recording longer than 15 minutes before, so the previous one was, as you guys know, was bumped. Even though I entered a special code that was supposed to allow me to bypass the length limit. But anyway, so here's governmental, chapter 1. How are governments and not-for-profit entities different? So you really, when you read this first chapter, there's a lot of kind of background information. You want to understand the three main characteristics that make these different. Okay, one is the lack of exchange transactions. So know what that means. Okay, which the local governments provide services, but the people that largely receive those don't make direct payments for them. Resources are provided through taxes primarily, but there's other sources too. So they do have both exchange transactions, but one of the characteristics is that they have the ability to take money, tax people. Okay, the other is ownership rights. Okay, there's not really residual interests. We have equity accounts or equity type accounts, fund balance, net assets, but those are, belong to the government. There's not ownership rights that can be transferred between. You live in the community or you don't. Okay. The third one is they're not interested in making a profit, right? That's not the objective. It's delivering services. So these are the characteristics that define or characterize local governments and not-for-profit entities. Their objectives, the financial reporting that's discussed in this first chapter are substantially different, and they lead to two distinct reporting models. So all through your accounting career so far, we've looked at financial reports that were directed at investors and creditors, providing information about management's performance of their custodial duties, as well as, the information to help project the firm's future profitability and thus value. In governments, it's about providing information about borrowing and economic resources, obligations and resources. But before that, for decades, the reporting was really accountability to citizens for tax funds that have been taken, resources that have been taken from citizens through taxation. And so there's this accountability. And so we have two sets of financial statements, the governmental funds financial statement, and then we have the government-wide, which are all economic resources. The governmental funds is the one that's going to be a little tricky for you. It's new. The economic resources model isn't so much different. It's just highly consolidated between all the government funds and all the enterprise funds. But you want to be sure that you understand those distinct objectives behind those reporting models. And the governmental funds is really cash basis. They call it modified accrual, but it's really cash basis, and it uses the current financial resources model, which means we're not going to look. We're going to focus on things that have been approved for within the current year's budget, and so it's budget oriented. Here, budgets are mandatory legal spending limits or maximums, and so there's a focus on showing how local government has conformed to those restrictions or limitations, and what they've done with it. So the accountability to citizens. The rest of the chapter is really about authoritative guidance. What's GASB's role is and the hierarchy there. We will do very little direct referencing of accounting standards. We'll use what's provided in the chapters. There's excerpts of relevant guidance there, but we're not going to do primary sources. But it's important to kind of understand that, so you know. All right, and so work through the problems that I've assigned. The first one is the CAFR, and just kind of I typically have students go and look at the Fairbanks, City of Fairbanks. That's a good one. If there's a government that your city used to live in, you're more interested in, go ahead and get that. Later in the semester, we get to Chapter 10. I'll have you do financial statement analysis using either Palmer or Ketchikan, a smaller government that has all the funds and financial measures that we all need, but it's not so large. Like the City of Denver is an interesting financial statements that they use for illustrations throughout the chapters, and so we'll get practice. But that financial report is fairly large. Okay, moving to Chapter 2. again, note that there's two sets of reports here. The governmental funds, and one of the things you're going to get out of the chapter is deciding for governmental funds what's a major fund, and there's a 5% rule and a 10% rule. So the 5%, a fund is considered major if, for example, it is 5%, represents 5% or more of revenues, expenses, or assets and liabilities of that other groups of funds. So we'll see, I'm getting ahead of myself, but there's types of funds: governmental funds, proprietary funds, fiduciary funds, and you're going to be looking at whether they're 5%, an individual fund is 5% or greater. And so you might say, well, what is a fund? Well, a fund is a fiscal entity. It's used for accounting purposes only, and it segregates. It's got its own trial balance, its own set of general ledger accounts that are self-balancing, debits and credits, assets equal liabilities and equity, so you can segregate or isolate particular transactions. Because all these, it's like pots of money, and all of them have restrictions on them except a general fund. General fund is common to all governments and not-for-profits, and that's where most of the transactions are recorded. Okay, so these alluded just a minute ago about types of funds. Be familiar with the types of. There's three main types of funds: government, proprietary, and fiduciary. We're going to spend time throughout the next 9 chapters looking at all these types of funds in detail. So there's 4 types of government funds. There's like I said, a general fund. There's special revenue. These are like grants that have restrictions, time or purpose restrictions. So there's funds are segregated to account for those, provide accountability. There's capital projects. They're similar to special revenues in that they're set up to account for the cost of building an asset, a capital asset. Okay. There's a debt service fund, and these are all government funds. So they use modified accrual. The last one, governmental fund, is permanent fund, and we'll talk about those. And those are funds that they're public funds, and they're set up to provide services, like a savings account. You usually can use the earnings, but not the principal, to provide government services. And we'll see that you get contributions. There's private purpose, public purpose. That are restricted and unrestricted in terms of whether you can spend the principal or just the earnings or none of it. Okay, so we'll take a quick gander here of the City of Denver's financial statements. There's some nice illustrations that summarize the different funds, where they fall in the fund. Know the financial statements. Spend some time on illustration 2.2 so you know what the common financial statements are for the various types of funds, and they show these, right? Here, for example, if you're in proprietary funds, so proprietary funds are activities that are intended to be self-supporting. In other words, you're going to charge user fees to cover the cost of providing the services. Typically, these cities operate utilities like electric, cable TV, trash service, so forth. They charge fees for those services, and so they're like an exchange transaction, a for-profit, hence the name enterprise or proprietary funds. Sometimes the customers are just internal. They're other parts of the government, and so we call these internal service funds. And examples of these would be like data processing or a central warehouse purchasing function. And so the costs of operating that are included in the cost of the goods or services, so you cover those costs. But it's not a strict requirement. Typically, the intent just has to be there. They don't always recover the cost. And the last group is fiduciary funds. I'm not going to say much about those, but those are funds that are entrusted to local government, and they belong to somebody else, another government or employees, things like that. Okay, and so pay attention when you go through this chapter to what fund reporting is, the types of funds that they're discussed, and then the required financial statements. There's a discussion of major fund reporting beginning on page 36 of my book. I know the pagination is a little different in the softbound. And then there's, again, pay attention to the illustrations. And then they have in Appendix A, City of Government, or City of Denver, Colorado. And so the first set of financial statements is a government-wide, and it's a balance sheet that's called Statement of Net Position. And then the income statement for government-wide is Statement of Activities. And the thing I want to note here to you is that this statement, you have to kind of study it, and we're going to review it a lot. The first column here is it's organized by function, so they're not natural classification that you're used to seeing, like wages, expense, rent, insurance. These are functional activities. So general government has finance, administration. Public safety is ambulance, fire, police, so forth. And the full cost of those departments is the first column. And you go down, and then they have the enterprise funds. So they've got waste, water management, that's sewage, an airport. And those are the full costs of those expenses of operating, just full accrual accounting. The next three columns are program revenues, program receipts. The first column is user services. The next are grants, operating, and capital. And so the fifth column there is the net cost. So you've got the expenses less program revenues, so the net cost. And these have to be covered by the bottom part of this, which are general revenues, which typically here are property and sales taxes. And then there's others, but those are the big ones. And that's common among local governments. Okay, so that's that format of statement. Now we move on to the governmental funds, and we have a balance sheet. It's called balance sheet, not statement of net position. And you'll see these are the major funds, and then the column has other. So those are the ones that did meet the criteria of 5% or 10% of the combined. All right, and so we'll go through, and you'll see the income statement here is statement of revenues, expenditures, and changes in fund balance. And so study this a little bit, and it's got, again, a functional orientation, and again, they've got the only major fund besides the general fund, which by default is always considered major, is something called human services. Okay, and this is prepared, these are prepared under modified accrual, so cash basis. And then the next set are the enterprise funds, and so they give you the detail of those major funds, and then all the non-majors are grouped in the last column called other. Okay, and so they have pretty much an example of every one of the fund types, and that's why they use City of Denver. Okay, so that's, in a nutshell, all we are worried about for this first two chapters.